Oh, hi everyone, Adam here. Just coming to you with a midweek video, an update on what I'm looking at. I'm just going to go through basically what the market has been doing, what I have been waiting for, and potentially what may happen next. Got a couple of predictions. Also going to go through how I'm looking at an extended target using another trade setup to find that level. So let's go through it. And I'm going to just bring, well, I've already got up the pound dollar on the 240 chart. And if I just zoom out here, you can see I've got a horizontal line in there. And I have had that there for a while. And clearly to the left, you can see this level of structure held up there. Need to load some more data up there. But you'll see that that level there excuse me, it's been lining. Roll that out properly. Sorry for flicking the chart backwards and forwards like that. Zoom it out properly. We've got this level of structure, and now I've taken what I see to be the last swing point. Up here, the market, we moved back down, we put it in a little retracement, and then we just slowly trickled all the way down to here. So I'm going to use this as the impulse leg, as the main Fibonacci swing. So I've got that from there to there. We've got the 618 lining up at just over the 46 even handle, 46.13. Coming in a little bit of structure there, but the main point is this blue line, the level of structure that it respected beforehand that I just showed you. And just look how it's respecting it now. Now, what I have been watching for, I had that structure level marked in. I put the Fibonacci level on there, the 61.8. But what I've been waiting for, as you can see we put in this channel here, I've been looking for an opportunity to trade up to that level, and I haven't had an entry point at all. And the market's been bouncing around here. We've gone from swing low to swing high, back down, up, just back and forth. And then I've been looking for a higher high, higher close. Now we didn't get one here. I'll just lift that up. If I could do that. We didn't actually close above. Let me just change the pointer so it's easy for you to see. I was looking at this high here. We didn't actually close above there with this candle or this candle. And then we did break above and close above on this candle. And then we moved up a little bit and then we shot down. So potentially we could have seen a breakout from here because we broke above and closed above here, but I actually wanted to see a clear cut break and close above the wick high. So as price moved back down here, we pin barred. I was considering getting in, but instead I thought I'd wait. We actually got that break and close above this level here on this candle, and so that signified to me that we were potentially about to break out. And then a few candles came down. I thought I wanted to wait until we got down to this level, well, around here, somewhere around here, because I wanted to give myself the best risk to reward possible. So I wanted to potentially get in here. I would probably have been looking for first targets around here with an extended target at this level that I eyeballed earlier in the week at that structure level in the fib level. Obviously I didn't get that opportunity, I missed it, and the price broke out and it went straight up there. It just shows you how price respects Sean Connery. Just shows you how price respects structure. So that's just what I've been looking at. I just wanted to show you how price does respect the structure level, how you could have got in there. And now let's just go on over to the other charts. Got the pound dollar to look at. Right, this is also another one with the structure levels, how everything's being respected at the moment. And if I just scroll all the way back, you see this structure, this zone that I've pulled out here. Dipped into it there 1, 2, 3 times. Fourth time. I'd say that's a pretty strong level of support. Major structure supported in there. respected in there, support and resistance. So if we zoom in here, you can see that a little bit clearer there. Look, support, support, resistance, fell off. So we moved off, created a low point, double bottomed, came back up. Within that level, I found that we had a 50% retracement level from the Fibonacci swing high to swing low. And so zooming in here a little bit, we will see that we have a Gartley pattern. But before I show you that, actually, what I was looking at here is price had moved up, moved down. I was waiting for price to get up to this level here, this structure level. And what I saw that if you look at the RSI, I got mine at 80, so we're well overbought there. At this point, price came down, we moved back up, made a higher high, touched the level I was looking for, yet we didn't on the RSI. So we've got regular divergence there, bearish divergence. And so with that combined, I needed a reason to get in. That wasn't good enough. I just couldn't enter for that reason alone. And what I wanted to do, let me just show you, if I just zoom in here a little bit, what I actually wanted to do, identify this Gartley pattern setup. So you'll see the Gartley pattern, bat pattern, sorry, not the Gartley pattern, excuse me. That was another set, another pair, another setup. So what happens when you're trading all these different patterns, getting confused with which pair it's on. Yeah, sorry, the bat pattern. So it completes at the 88.6 level. I saw that the price came up, I saw the divergence, price came down, and then I saw this huge wicked candle. Look at the rejection on that candle. Market pushed up, the bulls tried, and then it just got sucked straight back down again. I wanted to get in. I wanted to put an order in to get short the market there as soon as we broke this candle. And what I was planning to do, or what I wanted to do, was have stops up here, and I wanted to have my first target down, or my only target is down at the completion point of the bat pattern to trade it back up. But it's not in my rules. I couldn't do it. I had to be disciplined and stay out of the market. That's what I wanted to do. It actually played out. It didn't quite get there. We moved up and then we pushed down, and we didn't quite get stopped out of that. I'm still in the trade, so I'm in this bat pattern. But it's just, I just wanted to show you how there's certain stuff you can look at. There's other things when you get deep into it. There's a lot of other things that you can do. You can look for entries to trade down to an entry level of another pattern that you may be trading, or another setup that you've got identified. So that was just something for you to look at there. Just bear with me 2 seconds. I did have something else, and it was in fact on the 60-minute, I believe. So if we zoom out a little bit here, yeah, yes. So the bat pattern, I'm in the trade. Target 1's at 38.2, target 2's at the 61.8 as usual. However, the fact that these were the original targets here, so I'm going to follow the Fibonacci ratios with price action. So let me just get that one off. I'm going to have that one in there as well, 38.2, show you that one. Okay, let me move this over a little bit so it's a bit clearer to see. So these were the target levels. Right, now, so 38.2 was target 1, 61.8 target 2. However, the fact now that we did break and close above this point here, has me thinking that we could potentially push up a little bit further. Have I got any other reason? I need to ask myself, have I got any other reason to think that we may go even higher? And then when you can identify the patterns in the market, you can start to see that you have other ratios completing. Got an X to A, an A to B. Draw it out for you. X to A. Messed that one up, that didn't work. What's happening? X to A, A to B. What am I looking for next? I need to have a 127 Fibonacci extension from the X to A point. And I do, 127. So that also gives me X to A to B, X to A to B, B to C, C to D, completing at 173.78. Now this cipher pattern that we've got here wouldn't have been valid at all. We needed to close above the B leg here in the middle. Let me just get that pointer on again. So we needed to close above there, and we only just made it. We just did it. It's valid. I have to take the pattern. So what the whole point of what I'm explaining to you here, kind of went off track a little bit there, is the back pattern I'm in already. We broke and close above. Potentially could go higher. So my first targets are staying at the 38.2. However, I'm going to look for extended targets up at the 78.6 or slightly below. Because if the cipher pattern completes, I want to be in as much. I want to take as much money as possible out of this move, and then I will trade the cipher pattern back down. So it's just a great thing to see that you can use a certain trade setups to look for extended targets. You can go from one setup to another, literally one after the other. Once you've trained your eye, you literally, what did we do? We were looking at divergence. I was hoping for a double top or something, an entry to get in. We identified the back pattern, got into the back pattern. Can't talk. Got into the back pattern. Price moved down. Identified the cipher. Okay, if price does move up, we don't know if it's going straight down or if it may move up. If it moves up, I'm looking for an extended target to short the market straight back down again. And that's how trading is. It's great. Setups everywhere. You're never short of a trade. But you've got to be disciplined as well. In the early days, I would have been very, very tempted to short somewhere around here down. In fact, I used to do that. I used to think, oh, there's a pattern. There's a decompletion point. I'm going to short it. Price is going to get there and complete. And obviously, a hell of a lot of times, price just went the complete opposite way. The pattern didn't complete, and I was just stood there wondering what the hell was going on. But that's discipline. That's something you shouldn't be doing. That's why we have rules, and that's why we need to stick to them. So that's what I've got going there at the moment. Obviously, it's non-farms on Friday. So the market may be a little bit quiet, not too much movement. People will be waiting to see the results of Friday before they enter any positions. So I'm not expecting too much to go on tomorrow, but we'll see. You never know. Give the video a like, subscribe if you want to see some more trading ideas, some more setups. Give us a like so that I know that the content's good. Give it a share, tell your friends about it, and I look forward to seeing you on the next video. Take care, guys.